Hello and welcome, as it is Sunday, the 22nd day of July 2018. This is the Money Charts channel. My name is Derek. I'd like to welcome you. And like always, all trades, all bets via the such is that of your own risk, own reward. For myself, risk-reward management is always job number one. And within that job is trying to find the amazing strategies. And let's talk about one in a little bit. But before we do that, let's continue on within the 3-hour time frame. On Bitcoin, I was stating in the crypto day morning that this was via showing strength at the 18 highs. And now it has managed to get above it and start to accelerate on low volatility towards the upside. And what can you expect on a Sunday afternoon? Low volatility, normal, or high? And I would say low. Not always, but in this case, it is that of the case. So the 18 starting to rise. It's now entering the upper end of this resistance point. If it's going to make another floor higher, that's an area I'd like to see work as support between 75.80 and this high at 76.60. And because of the nice little movement, let's take a look at this on the single hour time frame. As we look at the price corrections, since it managed in here roughly yesterday morning rather, right around 7 o'clock, 6 o'clock, this time frame when it was consolidating within the 18, after making a few lower lows. And as I was mentioning, that typical pump it up higher, then 3-5 minutes later, you're just going to crush the market lower, which is what happened. But as I was stating, this was an area where you think it would start to go down. For the double zero timestamp, it came up to the 18 lows, didn't resist. Then it came up to the 18 highs, and when it came back down, it didn't break below, which is what bear markets do. And well, since that point, all the declines, we had one here at the 20-hour timestamp yesterday, which of course managed to make it to a higher high. It's not that much larger than such, but you know what? That's a really good leg higher, considering it made a low of decent proportions. And then it makes the higher low, albeit barely, at the 18 of lows. And we can see how it got up to this point and then showed strength amongst the 18 average of highs. And then 2 decent green candles to follow, and looking pretty good thereafter. So that's the analysis on Bitcoin. Let's move on to the cross of red coin and that of Bitcoin. And it's in a downtrend, or the price is much lower from where it was. In fact, it is no, it's half off. I was going to say well more than half off, but 119.58, that's pretty much 50% off. So it's in a cheap buy area, at least for my books it is. But more importantly, for the strategy I'm talking about, it's a very cheap coin. So the Dogecoin is in the same bout. Anything in these low double digits is perfect, into the low 100s as well. And in some cases, if you really want to, you can even go multiple hundreds as well. So what's the strategy? The strategy is to own every single number. Let me explain. Assume you decided you wanted to buy now at 58. And what we want to do is we want to sell every single number there is, but not starting at 59. You figure, what do I want for an original gain? 10%, 20%? Let's just assume you start at 65. Well, now what I want to do is I want to place a sell order on every single number. How far I would go, I'm not going to go to like 1,000, but I may do several numbers like 20 or 30 in a row, and then move it up in decent gaps after that, realizing that once many sell orders come in, there's going to have to be more sell orders that are added. And in situations like this, because the price is so low, you can, instead of having, say, one sell order, well, at one spot, you can sell 5% of that amount in 20 spots or something in that nature. So say you were selling 1,000 units here. It was going to work out that these numbers are going to go lower for how many you would sell on each one, for 2 reasons. Reason number 1, your coins. These coins are worth more on each one. So therefore, if you're selling 985 at 68, when you get up to the price point of 250, that number is going to be significantly lower, maybe 200 or 300 or whatever. I don't want to calculate that now. It's not important at this point. Realizing just that it would be lower. And just to show some quick calculations, if I still have them around, this is the a quick little amount, so the Satoshi number here. So if I owned 110,000 of a particular item, then I would start off by, or even, no, in this case, it worked out to 35,000. Anyway, it worked out to selling 1,300 at 21, 1,200 at 22, and the numbers would just keep going lower and lower to the point where you're selling 140 at 72, you're selling 80 at 98, you'd be selling 35 of them at 155, and you'd be, and so on and so forth. As you can see, as the value goes up, and when you think about it again, when you're going from a differential of say 50 to 51, you're basically getting a 2% move. When you go from 100 to 101, you're getting a 1% move, and then that number keeps going lower and lower. But as markets go higher, and there's just a little room like this, you would see that maybe you start selling here, and maybe your buy order was here. And you'd have the same thing with the buy orders too. So at the stage here, maybe you might start your buy orders at whatever number. I think once you start selling, you could, like for example, if say the first, say I sold 4 of these, it got up to 68 and then it started retracing back lower. So I'd have all 4 of these orders sell. And now I can decide, okay, so I sold 65 to 68. Obviously, I'm going to keep having orders at 69, 70, 71. That's going to stay, and I'm not going to reduce that until I get some buys in. And maybe I'll start buying at, say, 60 or 59. And then just keep on moving that lower. So as we look back and just see situations for this, and like for myself, when I was playing this back in like June, I remember buying this at like 4 and 5. I was like buying at 4, selling at 5, or buying at 5 and selling at 6. And I kept doing that. I'm thinking, man, that's a decent percentage move each time. So it might have been 5 and 6 in here during this run here in April, May. So in a spot like this, you would have a day where, let's assume, if you're playing it at the cheaper price even point, so at 7 Satoshi, you can start selling 10, 11, 12, and usually be like, holy crap, you just check once a day. You sold all the way up to either 21 or 22. You might not have gotten the high for, depending on where you are in the order, depends on if you got it or not. Sometimes you will, and depending on how long your orders have been in place, most times you may, of course, if you got good priority. And if you're putting in the orders in a long time ago, oftentimes you should. But you would see all the different sell orders come in, like 18, 17 of them. Now it's down to 15. Okay, let's start buying maybe, so we'd be buying at, say, 11 and lower, and obviously selling at, 23 and higher. So nothing would happen the next day. Maybe you'd get one buy at 11 here, maybe not. Well, assuming you did, maybe you'd put in sell order back at 22. And in this case, it would happen again. You would have all of those sell orders hit, like so many of them. In this case, we'll assume you got the highest number. Either way, it wouldn't make much of a difference at 53. So now you can be like, okay, maybe I'll start buying back at, say, 40. And you can go aggressive, even go 34, 35. But we'll go 40. And then on the next day, you would have seen a low of 26. So you would have woken up and seen, or woke up. You would have logged on to, well, if you did it first thing in the morning, whatever. But you would have logged on and see, if I had a buy order at 50 and it went down to 26, I would have had 14 buy orders filled. Also, I resumed my selling the previous day at 53. So all the sell orders 54 and above would have hit. So 54 through 484. That's magnificent. Now you would reset your orders. Because you had a few buys, you could probably start placing buy orders starting around 70 because of those extra accumulation. And then start placing new buy orders again, like around 35. And the next day you get all the sales, and you can see all the buybacks you would get and all the sales in here. You'd basically be playing all the moves. And by owning and taking advantage of every single number, you know when you're looking at the charts, and here you're not doing much, but if you, let's see a perfect day for that right here. If you just happen to look at the, say, this trading view first, you look every day, say at 7 p.m. Eastern, that's when you get off work, and you only want to do this once a day because you got other things to do, which is a normality in this world. And you'd see, oh, it went all the way up to 48. You'd be like, and it's down to 36. You could think, okay, I can start buying back now. I'll put a buy order at 36, 35, 34, 33, 32, and then just keep on working the game. So that's the strategy that I am considering doing such. Now the problem with codes that are much higher, and you can still get away with this in certain degrees, like the 400, 500 Satoshi codes. Maybe you do every 5 numbers, like 400, 405, 410, 415. So you can kind of get away with any single code of doing such in a mannerism like this, just to ensure that you're never gonna miss out on sales. And what it's gonna work out to is if you start selling at 80 and you complete the top near say 192 on a spot like this, well, then you're going to get an average of those numbers. So you're basically going to be selling around 140-ish or so. And that's the basic amount towards it. And because the markets overall have been so boring, I have decided to aggressively trade 3, not on a single number basis like this, but I'm considering, do I do this with that of red coin? And what I got going right now, and I'm thinking about even lowering its volatility as I'm saying this, is the XBY BTC fund. What I've been able to do, especially over the last week or so, I've accumulated a lot more of the coin, and if the prices continue to decline, I plan on doing such again. But I'm at the point now where I have about as many of these coins as I did during the December lows of last year. At least I'm very, very close to what I had at the December all-time lows, or when it was below 200, my lowest number that would be. I've accumulated quite a bit. I did so when it first broke 600, and then again, like I stated, over the last several days. So now that I got the larger inventory, this is what I'm considering. What I've got it set right now is 4% move, and then if it gets that, 4.5%, and just increasing the numbers by 0.5% each time, until, of course, buy orders would fill after the sales. And I know I could technically own every number. However, that means when you're at a price point right now of around 400 Satoshi, I'd have to put like 200 to 300 sell orders in, and I really, being a manual trader, meaning I don't have any scripts running at all other than spreadsheets, which doesn't count. But that means I have to manually put in every order. It's kind of like not fun to do. Which is why with 1 Satoshi coins, when you have like, say something at like 50 Satoshi, I would be like, or if you're selling first at 50 is another way of putting it. I could go like up until like 70 or so, then I might put one at 75 for a bit more, then maybe at 95, then maybe you get it about 150, and then you get it about 1,000. And I don't know why it does it. Maybe it's my wireless mouse. I don't know. But you're selling every single number. And the reason why I have these in here is wild situations in case someone does those weird buys where they buy up the whole market all at once. Realizing that when sell orders get filled, you're just going to keep editing and adjusting them along the way. Another one, and I've bought more of these too. I still got more to buy back from what I'd sold from before, but Komodo against BTC. I'm trading this on Binance, so that means I got, well, the rate's a bit higher now, but it's 0.075% when you use the Binance coin. Still the cheapest rake in town. But I'm also trading this on a very short-term level as well. Looking for this like in the XBY. Looking for like 5% moves, 4% moves over and over. And then play it on that level. And finally, it's going to have to be Litecoin because I want to sell short-term moves with coins that I own a lot of. And that is within the Litecoin and Binance pairing. So therefore, again, look for 3-4% moves over and over again. And in that situation there, what I'm hoping to have are the awesome situations because you're AFK, away from keyboard. Maybe I'm in a situation where my highest buy order is priced in at 2.15 on an exchange and my lowest sell order maybe 239. And then you have again at 242, 240, or even 245, 252, and so on and so forth. So what I'm hoping is you get situations, and it could work either on the buy or the sell, it doesn't matter. But let's assume first that it sells, and I sell all the way up to, say, 297. Big move. And it can be bigger than that. I mean, that still is, we just say we bet 2.25 at the time. That would only still be like 30+%. But still, nonetheless, you sell all the way, and then you realize, well, normally I would be looking to buy back at maybe say 260. But you come back and it's already down to 240. Oh, okay. So now you realize at that point you have amazing buying opportunities immediately, and thus your first buy is already 20 cents off. And of course, the same thing when you get any type of large V-shaped formations. You go to bed here. Say this is midnight. This is 4 in the morning, and then of course, and you end up buying here, and then the price is here, and you can already start selling already what you bought at the bottom end. So that's the type of situations that you're looking for, at least I'm looking for when doing stuff like this. Now let's take a look at this on Doggy, and on itself as a technical analysis level, ever since its April highs, mid to late April highs, it bottoms here at this 36 handle. We've had a move that's managed to get about half of its losses back, and then pull back down to the 18, and possibly now starting to rally through. It's on really decent volume within its move higher. But again, if you look at the numbers of the game, not only overall you collectively selling on the way up, buying on the way down, now you're selling this back again, but you're also able to take advantage of, and this is that situation like I'm mentioning before, for like a day like this. So you would end up one day here leaving the market. Oh, it closed at 55. And then you see here you had a low of 35 and a close of 51. And that means maybe you bought 35 all the way up to 41 or 42 or 43. Or even, for that matter, even 50, considering your last low was 53, 52 for that matter. For the reason why is because at this point here, when you went to a high at 69, you're like, okay, let's start buying it back at 54. So, or 55, that means 55, 54, 53, every single number goes down, you're going to own. At least a portion of. And you get every single one of those there. So normally, if you were to say buy at a bottom of 35, maybe you want to start selling at that of 40 or 41, 42. Well, if you come in and you see it's at 51, well, man, that's pretty good. And then if you think of where would you start selling? Well, if you're buying at 35, that all depends on what kind of percentage gains you want to have, because really that's what's important is after a buy, where do you place your sale, and after a sale, where do you place your buy? So if you choose 40 as your first sale target on 35, you're getting a differential of 5 points, which means that of on 30, that's pretty good percentage gain, just pretty good. For 3.5 is 10%. 7 is 20, so you're looking at about a 50% move. 15% move. If you start at, say, 44, that's a differential of 9 points. And 3.5 is 10%. So you're talking about under 30% of a move. Okay, so then maybe you do start at 44. In this case here, of course, you would see when you happen to log in that maybe the price was 51. And instead of selling 44 through 50 7 times, you can basically sell at 51 8 times and thus get a better trade. Same thing on a sell order. So yeah, okay, so now you sell, you wait, you get there in the day, and the price was 51. Where do you start selling? Where do you maybe sell? So maybe again you sell at 51. So if you do something like say 35 as your first buyback, that's 16 basis points or 32%. That's a very aggressive number. So if you're looking for a lot of action, positive gains, if you see there's a good chance of a nasty decline type thing going quick, then maybe. But if you go, say, 42, the differential there is 9 points. which is 18%. So you could even go 44 or 45 even, depending on your tolerance level. But somewhere in that level, you now have a situation where, okay, I last sold at 51. So that would mean if I chose 42, I would have a buy order at 42, 41, 40, 39, so on and so forth. I'd have a sell order at 52, 53, 54, 55, and then so on and so forth. And maybe you go 51 or 52 to be the next number, all the way up to, say, 69 or 72. And then you just go again, like I mentioned, 75, then maybe 90 again. Maybe you have another one at 150, and then sell them all maybe at 800. That's the type of thinking that I like to do. And then just let the market play out. If we look at something like ETC here, which is over 1/5 of a million Satoshi, or 217,981 right now with the last trade on Bittrex. Technical analysis states it's been going down, so I think 61.8% down move is in place. So before we talk about the same trading mechanism there, let's first calculate the Fibonacci. Low, I got 180.4, so 1804. And I'll place that in the Fibonacci calculator. The high, I got 2795. Is that the highest? Or excuse me, 2795, then 2794. So 2795 would be that of the high, which means the 61.8% down is 2132. It's already hit. It's already hit. Since then, it's looking to possibly just stay around there for a while. It's once you just see it, you don't even have to know that Fibonacci of that point is in place. Once I see enough red candles down, then it's time to buy now. Why? What's this looking against the dollar? Because I don't remember buying it for a while. I've got to be due to buy this. Well, I guess that's... Okay, that's the ETC against the dollar. But you can see a little bit of decline here. Just it hasn't had as deep of one. And due to Bitcoin increase, that's a lot of the reason why, because Bitcoin's been having great gains. Okay then, so let's take a look at ETC again. If you're doing the same sort of deal here, and you just basically look at it as, okay, you're playing low increments. If you're not getting the exact high, you're going to be damn close to it. If you do a situation, okay, I'm going to get into the game at 218.6 or at the 2186 handle, I'll call it. I'm not going to say, I can say 218,600. I already have, and I did again. But for easy math, we're going to call it the 218 handle. So maybe I'm going to start my selling off at, say, 231 or 230. Go 232 or even 233. And just do incrementally numbers and somewhere around that number. But enough where if it's going to have a big move, you know, oh my goodness, there's 30 sell orders or 20 sell orders, you know we're going to hit. If a decently small move comes in, you know 1, 2, or 3 might come in. And then work it out that way. Again, it's going to be a lot of work to just putting in, like he could be putting 20, 30, 40, 50, 60 orders in. That can take a good part of an hour even to really overload some buy and sell orders amongst a crossing or two. And generally speaking, because of all those extra orders you got to face, and well, Bittrex will remove them every 28 days. How annoying is that? That's why I like to just put in orders at different decent increments. Now, the risk on that is having a spot where, like, okay, I have my buy order in here, or even worse, maybe like this point, and then you miss it, which is going to happen. Same thing, of course, on sales. Maybe you have a sale order here for this move on July 13th. You missed it. Oh, well, that's part of the game. Of course, in spots like this, again, you're just going to have an average sale. Like if you start selling at 265 all the way up to 275, well, then you're going to have a sell average of about 270. That's really what it's going to play down to. And then here, if you've just been buying all the way from 252 to 214, you've basically got yourself in at a buy average at about 23. And along the way, of course, when you have these situations like again, on the big day in here, you would have had a whole bunch of buy orders fill, which meant you would have still been buying, like maybe down towards here, below this low and all those little spots here. And then you decide when the price was at 218, where do you start selling? Maybe you started selling up at 225. So you haven't sold anything yet from the fact. But you realize when you sell, say, at 225, that's going to become from your 213. Now that would be 12 points on 213. So that'd be like a very small volatile move. And that's why you want to understand how much of a gap do you want to have from your lowest sale to your highest bid. And then just stick with that frequency, because that's what's going to determine how well the profits are going to be. Because again, if you got a gap difference of 5-6%, that's what you're making on each trade pretty much, which isn't that much. And then if you got, of course, 10, 20, 30%, well, the higher percentage you have, the longer time you can spend in the middle range without having any buy or sell orders come into place. But again, this is just an idea that I'm thinking about. And I think, again, like the codes like Doggy and Redcoin, and of course all those other different type of miscellaneous altcoins you see that happen to be trading in the price range of about 8 to like, well, any Satoshi level under 100 is where you can own every single number. And that's, I think, an interesting way of playing the game. Thank you for tuning in and have yourself a great day. Bye-bye.